Hey everybody, this is John. Welcome to the free video. A couple of main questions people are asking me. A, is it too late to get into TLT? The answer is no. You got to understand bond rallies work a lot different than equity rallies. Bond rallies don't come all the way back to the 21. They get extended, come back to the 8, get extended, come back to the 8. At this point, it's setting up for the next pop. And of course, this is more of a reflection of, there's the 30-year bonds and the 10-year notes. By the way, mortgage rates are at, the 30-year bond actually had just made record low yields, so good time to refinance your loans. From there, what about the stock market as a whole? One of the things I'm keen on here is IWM, which is the Russell. And you can see that even though Russell's had a nice 2-day bounce here, all it did was smack dead right into that falling 21 EMA, and now it's reversing. And this is actually an island reversal, which is one of the most bearish setups that you can get. It's not a strict island reversal, but it's pretty close. So again, we want to keep that in mind that, it's not all about, you got to, on up days, the financial press talks about the good news, but we got to understand the overall market flow of what's going on. So there are going to be stocks out there like Shopify that don't care what's going on. That's great. But of course, the majority of the stocks, Goldman Sachs or whoever, is going to follow the indexes. And so we've got to understand the dynamics of the indexes. We've got to understand what kind of market condition that we're in, and then also which ones to take advantage of, right? Because, if you remember this day, it's like, wow, that was just crazy day to the upside, but this day was the best trading day of the year. Okay, so why was this the best trading day of the year? Well, I'll show you some screenshots from that day. All right, so the markets have been crazy, right? So we've got a situation right now where we've got tweets, trade wars, talk of global recession, right? And of course, if I could spell. And of course, the headlines are crazy. So one day the markets are exploding higher, and next they're coming lower. And so the question is are we actually heading for a bigger downturn? And if so, how do we trade that? And really just how do we trade a market like this in a way that we can still stay consistent no matter what the conditions are? Because when you're trading a market in an uptrend, it's totally different than when you're trading it in a downtrend. So on Thursday, I am going to do a free webinar, and it's going to focus, a large part of this is just trying to identify as quickly as possible which market condition that we're in, because there's 4 main market conditions, right? There's acceleration, accumulation, distribution, and declining. And the sooner you can pinpoint when you're in that one, then you'll know which setups will work best, because setups that work good in an accelerating market don't work in a declining market, and vice versa. So what we'll be doing is talking about the 3 account killing traps you got to be aware of as we're coming into the end of the year, and this is more of some macro stuff as well. The key to consistency in chaos. And if you don't really understand how to identify the kind of market you're in, is not in hindsight, but as you're in it, this gets really, really hard. So I'm going to show you some simple things to do that. Exactly when to target windfall profits in market meltdowns. Okay, well, let me show you an example of this. All right, so here's an example. So the S&Ps had this crazy up day, right? And then all of a sudden they puked. And it caught a lot of people by surprise. But if you understood what to look for, this was my best trading day of the year. Where, SPX call credit spread, short S&P futures, buying puts on the spiders, that kind of stuff. If you understand, what's happening and what to look for, that can make your entire month or quarter or year. Okay, so anyway, that's what I'm going to be talking about. Let's see, why you'll lose with the right strategy, the wrong conditions. Again, it comes down to identifying the conditions. When to take quick 20% gains versus holding on for 200% gains. This is important. You got to know, how much power is behind the move. How volatility can safely grow smaller accounts even faster, and then how to tell when big institutions are secretly dumping your stock. So again, this will be Thursday, August 22nd. Yes, August 22nd at 7 p.m. Central, and we'll just take a deep dive into this. You can go to simplertrading.com/urgent and sign up. All right? Sounds good. You guys have a good one, and looking forward to talking to you then.